Well, welcome to presentation training. What do investors really want to hear? So the thing is that entrepreneurs, they start a company and they're off doing and building this company for their purpose, and then they need capital and investors come into play, but we actually have two different motives that we're trying to achieve. So how do we bring those together to make it a good marriage as we continue to go forward, build out your business and support the growth of your company? So that's what we're going to be talking about today. So who am I? My name is Brianna McDonald. I'm the president for Keiretsu Forum Northwest. I've been involved with the organization since 2005 when my husband Nathan started it in the Seattle area. And I was an investor for just a very long time. I was invited to come sit at the table. Deal screening was one of my most favorite events. I love seeing kind of companies at their raw stage before they got to the formal forum process and were a little bit more polished. And when I first came to the table, I was 25 years old. I was pretty young. And I sat at this table with a bunch of old gray-haired men, and I listened to these companies pitch, and I'd think to myself, and I'd write down, what's your business? What's your product? How do you make money? And I'd think to myself, boy, I have no reason being in this room. I should not be here if I cannot get this. But then as I continued to listen on to the questions the investors asked, they asked all the same questions I wrote down, and I figured out it wasn't actually me. It was actually the entrepreneur pitching. They had a really great company. They just didn't know how to talk about what they were doing in a way that we could understand. So I've been doing formal presentation training for about 4 years now. I just kind of put this out into the universe, goodwill to really help entrepreneurs figure out where they should be at what stage, because it is different, and then work on coaching our companies coming through our process as well. All right, so who's Keiretsu Forum? If you're not familiar, we are the largest, most active angel network in the world. So we have over 55 chapters, 3 continents. We run the Pacific Northwest and Rockies region. We have 6 chapters within that region, and investors from all over an 8-state area that make up our investors. And we fund a lot of deals. We particularly fund a lot of companies that fit into this specific gap. These statistics are a little bit dated. I need to go back to the Center of Venture Research. I kept checking for 2019 stats and I didn't see them, but these numbers are telling, and I'm sure they didn't change very much in 2019. In fact, I think they probably increased, and maybe the numbers of venture deals decreased even though the number of capital increased. The numbers on the bottom are what I find most interesting. So we really help fill out these angel groups, the syndications, 500K up to 5 million, although we'll take it up to 10 million in investment for follow-on funding. I think one thing to really keep in mind as you look at this chart here is that there's different stages a company operates at. And as they're going through kind of their pre-seed, their seed, they can branch off and go 2 different directions. Not every company needs to go to a VC. There's a lot of implications that can come with venture funding, and there's a lot of good things that can come from just raising from private investors and family offices. So keep that in mind. Looking down below here, 23 billion went into 66,000 deals in 2018. Conversely, 130 billion, which is substantially more capital, went into just under 9,000 deals in venture capital world. So the way I like to describe it is that the VCs are really out there looking for unicorns. They're out there hunting for unicorns. And, angels aren't necessarily hunting for unicorns. We're looking for singles, doubles, triples. We're just looking to, help an entrepreneur push forward their business and then get a return in exchange. So, and if we happen to come across a unicorn occasionally, that's always fun too, but it's not exactly what we're looking for. Our 2019 league tables by PitchBook, we're getting all of our data finalized for 2020 to see how that all worked out, but we were the most active early stage in North America as well as late stage. So really seeing us move up this funding cycle, moving into later stage companies looking for returns quicker is something that we're very interested in. On the global stage, this is also, we are amongst many reputable groups up there. We came in #2 globally under 500 startups, but once again came in #1 late stage. So we're a very active group that funds a lot of deals and really helps support our investors and entrepreneurs moving through the process. Last year, you can see in 2019, the Northwest had about 54 million in funding. 83 out of 102 companies that came through our process received funding. As you can see, most of that is between life science and technology, although we do pepper in some consumer, some clean tech, and a bit of real estate. So we do like a diversified portfolio. For us, it's really team, competency of team that matters a lot when moving through our process. And that 20% of companies that did not receive funding, they either didn't follow our process or something critically went wrong in due diligence that did not make the company fundable. So if you're interested in learning more about our process, Amber is going to put up a poll here and she'll just leave the poll up. So if you want to listen to the presentation and be able to digest it and then figure out what you want your follow-up to be at the end, all you need to do is click on polls and it'll pop up. Our process is very structured. We have a committee review up front, an internal member review of our companies, of which it says 7 to 10. I need to update it for 2020 because honestly, we haven't been able to see more than 7 companies at deal screening in the virtual world. It's just too difficult. Our forum meetings, we see about 4 to 5 new deals, and then of that, due diligence. And then after that, if the company does well, they're able to bring in more than half their round in the bank and get that due diligence complete and invest in Keiretsu investors backing them. They can apply to our Keiretsu Capital Fund for a top off. All right, so enough about us and me and what we all do. Let's get into the crux of what we're talking about today. So creating a fundable pitch. And I have news for you. It's your pitch isn't raising you capital. The relationships that you build from your pitch help you raise capital. So keeping in mind that your pitch is just meant to be an overview, high level. And as you're going into this, thinking about it in different terms. I once started and failed a company many moons ago. That said, you know, I had to go raise $1 million, and thinking about raising $1 million is really daunting. But if I just go out there and I'm like, look, I just want to get 6 phone calls. I want to get 6 coffee meetings, or I want to get 8 coffee meetings. And you're setting that type of a goal. That's a much more achievable goal that could actually open up more doors. So thinking about your pitch that way, generating interest, that is the key thing. Because it's really, people invest in people they know and trust. And so it's the relationship building that follows. Know your audience. So I mentioned this a little bit just a few slides ago with the stage that your company is at. This is an ecosystem, and there is different funders at different stages, and you need to know who you're pitching to. I think the key takeaway here, though, that I want to bring to the forefront is that we are not philanthropists. We are investors. And the definition of an investor is a person or organization that puts money into financial plans, property, etc., with the expectation of receiving a profit. So we are looking to make money. That is why we are called investors. So you, as the entrepreneur, really need to do your homework to understand how we're going to actually make that money back prior to pitching to anyone to begin with. So please do keep that in mind as we go through this. All right, so getting into your pitch. What is your purpose? So this is really important, and this comes through even in Zoom, through your inflection in your voice, through your body language. This is your gasoline. This is what gets you up early in the morning. This is what keeps you up late at night. This is the reason why you went out and you started this company and are solving this problem. And for investors, this is really important because as the CEO, we need someone who is going to be able to follow through till the end and have that drive and have that motivation. If you don't care about what you're doing, it's going to show and it's going to come through your pitch. So please be sure to think about that as you move through and really be dialed in on that focus. The second thing your pitch is going to do is to eliminate red flags. Investors don't invest for two reasons: red flags and confusion. And this typically happens when you go too deep into the weeds on what your company is. So once again, keeping in mind interest. All you want to do is generate interest. So if you have a life sciences type company that you could really get in deep to the science, you can save that for an hour-long phone call where you can go back and forth and answer the questions much better than you can in 7 minutes. So just keep that in mind. Red flags and confusion. You want to eliminate those because we're just going to move on to the next deal because there's plenty of deals out there. Third, demonstrate competency. So we need to know that you're competent and that you've built a team around yourself that is also competent. You cannot have all the answers as a CEO. If you are a new CEO, and we'll get into this a little bit on the team slide, who are those advisors? Who are those trusted individuals that you have surrounded yourself around? And if you tell me it's your attorney, I'm going to move on to the next company. I'll get to that in the team slide. The last thing, if you do those things, you understand who your audience is, you translate that passion, that purpose, you eliminate red flags, you demonstrate competency, you will be successful in being able to raise capital. So please do keep that in mind. All right, so creating your pitch deck. Now this is a very vanilla standardized deck. And it is stationed this way specifically for each slide to build on the next slide. And the most important slides are at the end. And they're at the end is because we have the attention span of gnats. So what you talked to me about on the first and second slide, I don't remember by the time I get to the last slide. So you have to budget your time accordingly to be able to make it through your slides, have each slide build on the next slide, keep me focused on what you're talking about, to be able to get to the most important slides, which unfortunately the entrepreneurs usually skip over, which is the team, the deal, and the exit. So how are you able to do that? How are you able to budget that and know you're going to make it through? Also, a couple of things to keep in mind when creating your pitch deck. Now, we have the ability to multitask as human beings, sort of. Like we can do it. We typically don't do as good of a job, but we don't have the ability to multi-focus. I cannot listen to two conversations at the same time. I cannot text and drive at the same time. We have to, focus on one thing at a time. So if your slides are not coming in an order that I'm used to seeing and I'm used to following, and this is why it's really important to know who your audience is, ask them their preferred slide order before you pitch to them, because if the slides don't come in the order that I expect, I'm going to start asking questions to myself as an investor. Well, what's the market? Like, where is that and why? What is their, addressable market? And what are they going after? And I'll start asking myself these questions and problem solving as you pitch. And guess what I hear coming out of your mouth while I'm problem solving in my mind? Wah, 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 wah. Because I can't focus on it. I'm problem solving. So these slides are meant to help keep the investor focused on what each slide builds. So it's like Game of Thrones or a really good series that you've watched. It builds up momentum to the end. So keep that in mind as we move through and keep out the budgeting of time. And this presentation today will also go in a bit of the same order. I will spend most of my time on 11, 12, and 13. All right, so getting in, first slide. This is probably the most important slide. It's a quick slide. It's fast. But it gives me everything I need as an investor. I need to know who you are. I need to know the name of your company. I need to know briefly, what do you do? I have a B2B SaaS platform. Fantastic. I, as an investor, now know exactly what I'm about to listen to, and I need to know how much capital you're raising. I do not need to know the deal terms. I do not need to go into the weeds on anything. I just need the foundation for what I'm about to hear, because then I'm not going to be guessing at all through your pitch on, well, what is the business and why are they here in front of me? And how much capital are they raising? I mean, these things all come up in our minds as we're listening to these pitches. So just real quick, high level overview, foundation of everything I'm about to hear. Next slide, problem slide. Now this is your favorite slide because you are super passionate about solving the problem. That's why you went out and created this company. I got news for you. I don't care. I don't care about the problem. I care that there is a problem. I care that you're not searching for a problem, but I don't really care about the problem. I'm not investing in the problem. And chances are I probably know what the problem is already to begin with. And so I don't need you spending an immense amount of time on the problem. I have seen entrepreneurs spend at least 2.5 to 3 minutes on this slide. And now you only have 4 minutes left to get through the most important part of your presentation. So look at the slide. What do you feel? Do you feel something? Is this woman extremely frustrated? She's frustrated because she constantly has to listen to too much of the problem. Okay, stop talking about the problem. Show me the problem. Show me in pictures that feeling that you're helping to overcome. It is an emotional attachment that you are having with these investors. It is actually more of an act of psychology than it is anything else. How do you generate the interest, right? Without spending too much time here. So what is it that you're solving? Show it to me. We can thank Apple for the fact that we think in pictures and we no longer can use words. And then come to the solution. I care about the solution. This is what I'm investing in, is the solution. I want to know what it is. I want to know how it solves the problem. I want to know how it's better than what's currently out in the market. I want to know what this is. And I want you to spend time here. And I don't want you to breeze over this. Spend a couple of slides and tell me about this solution. Show me in pictures. Show me how it works. Show me happy people that, are using your solution. Once again, getting back to that emotional connection with those investors to be able to generate that interest. And then from the solution, go into the market. So I now know what the problem is, what the solution is, and what the total addressable market is. But here as well, I need it to dial in. I need to know what your target market is and why. Why is it this? Show me this in a pie chart. Show me this. Don't just write it out in words. Show me how you can do this. You could even span it out in color coding, how you're going to get to market and then potentially grow. So for me, this is a red flag slide. And it's a red flag slide because it ties directly to your financials. It shows me that you have the competency and the ability to scale. It shows me that you have methodically thought about how you're going to get this product to market and how you're going to take out that slice of the pie. It shows me that. So this slide here ties directly to the financial projection slide for me. If you have a product that's for everybody, I will automatically dismiss your company. So I will move along because you have not done your research. You do not know who your customers are. You just have a product that's for everyone. Great. You're a 2-person startup. How on earth are you going to be able to conquer that? You're not. So you've got to start small. Are you starting regionally? Are you starting with a demographic? What type of focus do you have? So give me the big picture and then really narrow it down. And as you narrow it down, then we get into the crux of what we're funding here, which is your go-to-market strategy. So you're able to build off that little piece of the pie that you pull out and tell me about them. Who are your customers? Who are they? Do you have a pipeline that's currently active? Do you have people that are already signed up? Show me logos. Once again, that emotional connection. We identify with brands. We identify with how many people have you gone out and talked to that are actually going to go use this product? And what is your sales strategy? So all of these things are really, really important. I put it in 2 slides. Sometimes it's 3 slides. I need to see what this is. So you're not only showing me how you're going to get there, but how you're going to close them, what the anticipated time period it is, I mean, if you're manufacturing it somewhere, where's that going to be? If it's a life science company, this is a bit different. Go-to-market can really be leveraged with, moving through the FDA. If it's a 510K, you will be eventually selling to people and doing that. So that's where I am at with the go-to-market. This is really, really important. Do not skip over this. A lot of times entrepreneurs will skip over their go-to-market slide, and especially in this phase of growth and development, this is what we fund. This is what our dollars will be going towards. And so we just need more of an explanation of what this is and the work that you've done and the traction you have to date. All right, so you're getting to market. Now, give me just really quick, and this you do not need to spend a lot of time here. This is actually a slide that you come back to probably during Q&A, but you want to at least include something here that shows that you have barriers to entry. So what makes you special? Is there trade secrets? Is there IP? Where are you at? Do you have issued patents? Do you have pending patents? What is it? What is it? Because literally every single pitch, I get to hear an investor say, well, what's going to stop Amazon from just, going and creating this? So, just include it and know that you're going to have to talk about barriers at some point. But don't spend a lot of time here, but do create that barrier. And as you then create that barrier, you get to and Amber's going to smile. This is one of my favorite slides. So competition. And I say this as a person who was absolutely terrified of her competition when she started a company. And I came to learn that competition is awesome. So it is awesome in so many different ways. One, if you have competition out there that is strong, they've already blazed the trail for you. You just need to go down the trail. You can understand who the customers are. You can understand everything that they've done. You can learn from their mistakes, study them, understand them, figure out what they've done in the past, learn from them. There's so much there. If you are trailblazing and you have that machete in hand and you're out there and you have no competition, think again, you always have competition because you have status quo. But you have a lot harder uphill battle to go than if you do have really established competition. The other thing I love about competition is they're potential acquirers. They can buy you. We want to return. We want to understand that. So start reaching out to your competition. Befriend some people. I'm not saying give up all your trade secrets. I'm not saying give up anything, but you can befriend them, have them be put on your radar, their radar. And so when the timing is right, and even if they come on as a bit of an advisor to the company, you've now spread some of the love around. So they're going to benefit by your success. So there's a lot of strategy that can be built into competition. And it's not to be feared. One thing that I have learned just over the years is that there's lots of ideas out there, right? And usually when someone comes up with an idea and they're going to go execute upon it, that idea finds a home. And it's really up to them to cultivate it and grow it. And no one has that passion or that understanding to really go out there and copy them. Like, does it happen occasionally? Sure. But not really. Not most of the time, no. So you got to be able to talk about what you're doing. You got to be able to befriend your competition, keep them at an arm's length, and understand the things that they've done in the past. So I love to see this as a quadrant slide with logos once again. We read from left to right, which is why our eyes track, and that's why your logo usually ends up in the upper right-hand corner. So that's good. If you are going to be using some type of a chart, I do encourage green checks and red X's. Once again, so much of language is not done with words. It's done with colors. It's done with inflection, voice. There's so many different ways that we communicate with one another. Putting yourself at the bottom of a list is not a good position to do. So I do see that sometimes where entrepreneurs will list out the competition and then they'll put themselves as the bottom because they're the best. but you're at the bottom. So, you know, make sure to position yourself at the top. Think about the psychology that goes into building a slide and how this is all going to play. Status quo is also competition. Many moons ago, I read a business plan for a university business plan competition, and they created a bracelet to hide a key in. And they listed off 3 different competitors, and I'll never forget this reading through their business plan. But they had like 3 different competitors and none other. And I'm like, well, wait a second. What about the pocket? What about a purse? You know, what about a bag? Like, those things are competition and changing human behavior, even though change is the one thing that's constant in this universe, is probably one of the more difficult things to do. So do not shy away from that either. All right, and then we get to financial projections, which once again ties back to the market slide. So you have done your research with your market and you understand how you're going to grow your business. You understand the different channels, the customers, the verticals that you're moving in as you scale year over year. You know where the funding is going to come in place. You understand your capitalization table and how you're going to get to exit. And this is where building in your financial projections comes to play. We understand as investors, these are financial projections. This is not reality. That said, give me real numbers. The last word that I want to hear when an entrepreneur is describing their financial projections is conservative. For me, those types of words tell me zero, nothing, nilch. What does that mean? You have conservative financial projections? What is that? I want to know, is this 1% of the market, 2% of the market, 10% of the market? What is it? Give me those numbers and let me know that you know them inside and out. If I ask in any year which customers from what verticals with how much capital has come into there, you should be able to answer that for me. Make sure your numbers are correct. Do not show me a table with, you know, EBITDA and all these numbers, because once again, I can like read the slide and like try and figure out what all these numbers mean while you're talking. But if I'm doing that, once again, I just listen to you wah, 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 wah in the background. I don't actually hear anything you say. So we have executive summaries that complement the pitches that have space for those tables to be in there. Show me a graph. I want to see the hockey stick. All right. And many years ago, I heard an investor in the room, they left off the financial projections and they just put a hockey stick up in place. And, you know, everybody chuckled and laughed and they thought it was funny. And then after they left the room and we talked about them, it really came back to, well, we all know their projections, but we just need to know that it has the ability to scale. Like, we need to see the hockey stick. So as much as we joke about the hockey stick, it needs to be there. If you start calculating your financial projections and the number comes up flat kind of again and again, or there's a slight increase, but it's really not curving. This does not mean that you make adjustments to the financials so you can get that curvature. This means you need to have an honest heart-to-heart with yourself on if going after private investment is actually the place for you. There's lots of different types of companies out there, lots. There's small businesses. There's so many different types of businesses. Not all of them are meant to go raise capital from private investors. You could get a loan, you could get a grant, you could go to a bank even. Craft 3 is a bank that does lend to startup companies. You know, what can you do to get this capital in another way if you're not actually going to be able to give a return to these investors that you should? And so I encourage you to really work through this and tie it to your market and look at it and be realistic about what you're able to do. Because if that number keeps falling up flat, one, the investors will see it in the pitch because they're professional investors and they know what they're looking for. They understand markets and different things that are going on. And two, you're going to be pulling money from an ecosystem that really needs capital to go back in to continue to move. So think about that. Think about your use of funds. Think about your metrics. This is a really important slide that needs to be shown to us in pictures and talked about in a way to be able to understand how you're going to be able to go the distance and really continue to grow. All right, next slide. So just kind of to recap on my slide order here. We have problem, we have solution, we have market, we have go-to-market, we have barriers to entry, we have competition, financials. So the financials, what comes next is really important, is the team, because the team is who is executing upon all of that. And so, and this slide, unfortunately, 80% of the time, entrepreneurs skip over it because they spent too much time on the problem or someplace else. They didn't budget their time accordingly on each slide. And it's like, oh, this is my team. They're great, blah, blah, blah. Move on to the next slide. I need to get to the deal. Wrong answer. Like, you need to spend time here. I need to understand as an investor who you are, why you're in this position, who's your team, where do they come from, how do they complement you. If this is your first rodeo, that's fine. But who are your advisors that are supporting you? And if you tell me and you list out your attorney or your CPA as advisors, I will automatically dismiss you because they are there to serve you. And so many times I see entrepreneurs being managed by their attorneys that they're paying $600-700 an hour to. No, you manage them. And you need to really take that by the reins from the very beginning. CPAs and attorneys are great and they serve their purpose, but they are inherently risk adverse. They are inherently the opposite of what you are trying to do. So when I talk about advisors, I talk about people who have been there, done that, people who have started and exited companies before, people who are relative to the industry. Those are always important. But those entrepreneurial advisors, those individuals that can really be there to support you and the company as you continue to grow, are essential. They aren't just names you put up on a slide that you gave shares to for the sake of doing that. You need to use them, utilize them, manage them. It's really important. They are there to support you. You also need a board. Who's on your board? What does that look like? And they're there, and it's really important to support the investors. So you have two different modes that you're working here with both the investors and the board of directors. So I need to see logos. You know, don't write out long bios of who they are. Don't just list out names. I need pretty pictures, smiling faces, logos of where they've come from, where they've been in the past. Also keeping in mind that, you know, corporations are great, and it's great to be able to find those individuals from Microsoft or Amazon or whatever to be able to put up on your slide. But at the end of the day, what type of real startup experience do they have? Because the type of lifestyle that they come from is very different than an entrepreneurial lifestyle. They come from a place where they get their desk given to them and their computer given to them and their phone. And if they're hungry and they're on campus, they just walk downstairs and they get their free lunch and, you know, all these different perks that come with working at a big corporation. So those are things to keep in mind, but do not skip over this slide. Tell me about your team, because at the end of the day, if this team doesn't execute on everything that I just saw in this pitch, guess what happens to my investment? It goes to zero. So as well as it does for you. All right, so the deal, and this is where I actually spend a lot of time. This is really important in so many ways. So most of the time, what I see from entrepreneurs is they get their docs from their attorney drew them up. They don't really understand what's in the docs. You need to have all your paperwork done. You need to understand your deal terms. If you are using a convertible note, those aren't standardized. You need to understand the nuance, the benefits to investors, the benefits to you. The attorney is there to benefit you. That's great. You're paying them to do that. That said, this is a marriage. So how is this going to be fair and balanced that an investor is actually going to want to sign on to these deal terms? Market determines value. And right now you are selling and marketing your company to us. It's the reality of it. You're selling off a portion of your business for our capital. And if we are not receptive to that, you're not going to be successful in fundraising. So How are you researching your market? Where are you going? Are you going the right place at the right time? Or if you're a seed stage company, are you going to a seed group? If you're a pre-revenue company and you're thinking about coming to Keiretsu, think again. We don't really fund those types of deals. So it's an ecosystem, and we're happy to send you into the direction you need to go, but please do keep in mind, you need to understand that. I've had entrepreneurs pitch to us. They don't have their paperwork done. I'm not writing you a personal check. I'm writing a check into a company. Deal terms. Okay, so I sold real estate in my previous life before children. And I never thought I would use real estate and venture capital, but when it comes to deal terms, I actually do. So we as investors like to be tied to the success of the business. And that is what equity is. Now you can think about it like a house, right? So if you're going out and you're looking at real estate, a house is a more secure investment because it has the land underneath it. So even if the house burns down, you still own that piece of property, right? And that's really ideally what investors are looking for. That's equity. That's what we think about when we think about equity. We're tied directly to the success of the business right away. It's probably the most secure investment for us as investors as we look at these deal terms. Now, there's also convertible notes, which I mentioned are not standardized. They're a bit of dime a dozen, and there's some really, really shady clauses that we have seen within these documents that you need to understand and read through prior to coming and pitching to investors. That said, I call a convertible note a condo with a view. So I'm buying air. I have no land. I don't have any equity, right? But I have this lovely view, which can be seen as interest, maturity date, in discount on future valuation. That really helps to make me feel a little bit better about buying air and about buying this promise one day that I'm going to have equity in something. So I know that you're going to have to convert this over in a certain timeline. There's a debt load on the company, which also incentivizes the company to convert it into equity, and that'll be moving forward, still understanding the deal terms. And then there's safe notes, simple agreement for future equity. I have yet to talk to an investor in this country that likes a safe note. Attorneys love them. Entrepreneurs love them. They're cheap, they're fast. I have yet to meet one that likes one. So a safe note I call a ground floor condo conversion. You're not really quite sure, the building's a little sketchy, it's really easily broken into, and when the market tanks, you're left with nothing. So I'm basically giving you, Mr. or Mrs. Entrepreneur, my hard-earned cash for a promise that one day, maybe, if I'm lucky, you might actually convert this into equity. It is not fair, it is not balanced, it does not benefit both sides of the table. It can be a fast vehicle, it can be a good vehicle to use potentially with pre-seed funding and when you don't have a valuation set and you don't have a lot of cash on hand. But I mean, I've seen some $50 million safe notes here this year, which I find absurd. And so I just really do your research on where you're going. Talk to investors, talk to what they want to have in their deal terms, leverage those true business advisors before you go out and fundraise, and don't just take what your attorney says as the end all be all, because it's not, because market determines value. Now, the other thing we're going to get to here is valuation. So valuation can be really difficult and challenging. And, you know, how do you really formulate valuation? Sweat equity, unfortunately, as investors, you don't care a whole lot about. You started off on this passion to go build this company. You're building it and doing it. I need more than just sweat equity that goes into it. We're looking at IP. We're looking at customers, we're looking at revenue, we're looking at non-dilutive funding. There's a bunch of different factors that can go into helping to generate your valuation. Crunchbase can be a nice starting spot, but it is not the end all be all, and just because Crunchbase had something happen does not make it real or what investors want. So think about it, going back to real estate once again. You're looking for a house and you find this beautiful house online in this great neighborhood, and it's stunningly gorgeous. And then you see it's been on the market for 6 months. And you think to yourself, gosh, what's wrong with that house? Like there must be some really bad plumbing, or maybe the neighbors are horrible, or gosh, it must have foundation issues. Like something is really wrong with this house for it to be on the market 6 months in this neighborhood looking like that. Well, what if the house was just overpriced? You're not going to buy the most expensive house in the neighborhood. So think about that. How quick do you want to get your cash in the door? Because if you just are going after a high valuation, which literally is like sometimes tenths of percentage points in terms of your cap table and dilution that comes into play, you might just want to lower your valuation and get the deal done. So you can get back to doing what you do best, which is building your company, not doing 2 full-time jobs of fundraising and building your company. Why are you creating such a high valuation? Who actually helped you come up with it? Did you come up with it yourself? Did you work with your advisors? Where did it come from? I have seen companies out of the Bay Area come to me that are manufacturing hardware. They have no customers. They have no prototype. It's all an idea, but it's a safe note, and they have a $10 million cap on it. They can go pound sand. I'm going to go move on to the next deal. It's too expensive. I'm not going to be putting my hard-earned cash into something like that that doesn't have any validation. So you really need to think hard and strategize around that on your valuation. Also, in building out your capitalization. Now, I talked about this a bit in financial projections. Your cap table and the total capitalization of the company. Each valuation inflection point should go up. If you price your company too high at one point and then you miss those milestones, guess what happens? You get to go back to all those investors and talk to them about a down round. How fun is that? Do you want to go do that? Or do you actually want to plan what it should be from the very beginning? So before you go out and even think about fundraising, you should understand this and understand that it is a living document that changes throughout time, but you need to have a basic understanding of what this is, because that total capitalization that you're going to need for your company is also going to impact the exit. Next, cap tables. We have fixed so many broken cap tables. Safe note after safe note after safe note after safe note, then convertible note and convertible note and another safe note. No, they're eventually going to do equity. Do you know what that math does to a person's brain? It makes it hurt really bad. You have no idea how much of the company you've given up. You have no idea what's going on with it. You really need to strategize. These are tools that are just not meant to be used because they're cheap and it seems good. You need to have a strategy behind it. And what is that fundraising strategy? So also, upon exit, if your cap table is totally foobarred, you're not going to sell. These major players that are out there buying companies, they're looking for professionals that understand what they're doing. And if you don't start from the very beginning doing this, you're going to mess up the ending big time. So it takes a lot of planning up front. Understand it inside and out. Work with those advisors before you ever go raise a cent, because this is your company. This is your business. This is your product that you've created, and you are inviting other people into it. You are bringing them along for the ride. And so, before you start just endlessly selling off your company, you should really understand the implications and why you're actually working so hard to achieve these goals. So this is it. This is the reason why you work your tail off. It's to be able to get an exit, to be able to achieve something. And most of our companies actually, they just build and sell companies again and again and again. We are not a common folk that work in this industry. We are a very special breed of people that have a risk tolerance like no other, that are innovative and, have just a special skill set that not anybody has. right? And so really understanding what the outcome is from the beginning is important. Now, if you tell me it's M&A and IPO, I'm going to question that. If there's a lack of focus. If you're going to IPO a company, I need to know that you've been planning to IPO the company since the very first day you started the company. Because when you go through those documents at the very end to IPO a company, they're going to need that first lease agreement. They're going to need everything from the very beginning, all nicely documented in order for it to go well. If you do not have all those things, you can FUBAR your IPO and your investors will lose money, as will you. If you're going to go M&A, which is the more desired route, you need to be able to plant those seeds early on and have a strategy behind that and water them, allow them to grow, you know? And so this is where I talk about competition. This is where I talk about other things. Relationships are everything. Getting yourself on the map. How can you do that? Get in front of the right people as you leverage your investor network. You know, think about who can introduce you to different people at different times and make sure the timing's right. Understand the comps. What's going on in this space? Is this actually going to be, you know, a 3 to 5x return, or are you looking at a 10x return? What is it going to be? What do you anticipate that? If you come to me and tell me you're going to exit in 3 to 5 years, so have all the other 500 plus companies that I've seen pitch over the last decade. So, you know, be realistic with me about the exit timeline. Don't just tell me 3 to 5 years because it sounds good. In all honesty, what I've seen from the marketplace is it's been like 8 to 12 years to exit out of a deal. So, you know, and as professional investors, we get it. We understand it. We know what's going on. But once again, we just don't want to be told something because that's what sounds good, you know. We're going to be interested in you because of the product, because of the things you're doing, because of the thought that's gone into it and the planning and how you're actually going to deliver us an ROI. One thing that I do think is really important to take in consideration is you have your business advisors, but also, you know, as you start getting into that phase, as you continue to grow, create an exit board of advisors helping you with that. If you get a phone call in the middle of the night that says, hey, I want to buy your company, chances are you're being lowballed and you're probably not going to get the deal you deserve. You've got to create a market. You've got to create some demand in order to get the best price as you go to sell your company. The other thing that I think is really lost on this is just like ideation, just like creation, just like growth, exit is another phase of a company life cycle. It takes anywhere from 12 to 24 months to successfully exit out of a company. It takes time, and chances are that the exit process starts before you peak. So how are you supposed to know that, right? You're moving, you're shaking, you're growing. This is awesome. This is fantastic. You wake up one day and, oh crap, Google just bought one of your competitors. And now you're scrambling, you're racing, you're trying to make yourself relevant again as the time continues on and the valuation just drops. So it takes planning. And so really think about that. Be thoughtful about your exit. Do not skip over this slide. I'm an investor and I'm interested in making money. All right, so this is what I call the traction slide. Some people like to call it the summary slide. I still like to call it the traction slide. So this is all the things you've accomplished to date. So this is because I have an attention span of a gnat, thank Apple, and I don't remember anything from the beginning of your deck because you just got done going through the deal terms and I'm trying to figure out those and how you exit and your team, and I'm putting all those things together in my mind. So tell me, once again, you have this great product, you have this much complete, you have this many customers, you have these patents issued, or you filed this many patents, you have, you know, done X, Y, and Z. You've created and had some media promotion, press acknowledgments, whatever it is, decorate this slide. Make it awesome. Reiterate to me one more time before I fill out my interest sheet why I'm going to be interested in your company, why I'm going to be interested in having a call with you. This is that slide to just kind of recap everything very quickly. And then the last slide, I always recommend thanking investors for their time, reiterate the problem that you're solving. You can once again put those press acknowledgments, those awards, those logos, those pictures, everything that we're going to emotionally identify with up on this slide, have your contact information there, and then open it up. Now, if you're moving through our process and you're going to the forums, this is where you would ask for a due diligence team. This is where you ask for support and help. Do keep that in mind. So just as I summarize everything that I just went through, and this is a lot, and this isn't actually everything, but it's a good portion of it, is the first one is know your audience. Are you actually going to the right place at the right time? Do you have the right investors there that are going to help you and help you build out your network and get you to the next stage? Are your documents done, and do you understand your deal terms? Once again, we care about the solution, not the problem. Your pitch is only an overview to generate interest. Stay out of the weeds, creates less confusion. Less words, more pictures. Do not make investors read slides. Know your capitalization plan and know it inside and out. What's your exit strategy? Be realistic about the timing. And lastly, and probably most important, is you don't need to have all the answers. We understand fully that this is a startup company. This is a company that is growing and learning, but you know what is really important is that you're coachable. So, be coachable. And that's gains big brownie points. And so that's it. That's what I got for you. Thanks for joining in and listening to my talk. And thanks, Marome, for being on and hearing, and definitely open to strategizing to help drive some consistency between the different regions with our pitches and doing all of that. So I wish you all a very safe end to 2020 and looking forward to starting a new year with new hope and hopefully lots of vaccinations, and it'll be the year of the needle.
Yeah.